So if you've been involved with the stock market for a while, then you know it takes a good understanding of not only the markets, but of human emotion as well. However, that's kind of easier said than done, especially when you think about work, family, school, and all the other responsibilities that we have. Finding consistent candidates to trade can be very challenging. So in this video, I'm going to break down some of the tips and strategies to help you find the next big move, no matter what season of life you're in. Coming right up.
Hey, what's up? Rob here with Wealth Builders HQ, where we bring you the best tips and tools for building your skills to develop wealth for today and well into the future. And on this channel, we do a lot of stock market analysis for long and short term, as well as recaps just like this one. So if you're new here, consider subscribing. Now, one of the questions we get most from our Wealth Builders HQ community is, how do you look at where the stock market has been and determine where it is headed? So we have actually put together an entire free live training workshop that is all about finding the best candidates for today's market. And there's a section for the community, you, to bring your stocks to the event and have me analyze them for you in real time. This free workshop is called Power Hour, and it's taught every Monday live online at noon Eastern Time. I'll leave a link to it below in the show notes.
So let's start off with a review from the S&P 500 from last week. So if you look at the orange bar, that's the last market review or market update that we did. That was from the previous Friday. We gapped down below our rectangle on Monday, which was the start of what's going on right now. Good strong push down on Monday, which is this day right here. Right, a little doji type, spinning top type candle in there on Tuesday. Wednesday was a complete push down to the 2700 level with a small bounce on Thursday. Friday was an interesting day. We pushed back up on Friday. We retested the bottom of this rectangle, which is the equivalent of the top of this rectangle, on Monday, Wednesday, and Friday, and have not been able to break above. Even more importantly, we have not been able to close above this uptrend line on the support level on the S&P 500 for this diagonal and get the moving averages to start shifting back in the correct directions. With all of that being said, the S&P has moved into bearish territory and has not given us a clear bear signal yet, but it is telling us that the bull is losing some of its rhythm right now. And unless something's changed economics-wise, report-wise, things like that, we're going to see the potential of the continuation on the drop here on the S&P 500. So let's go ahead and look at some of the economic reports that we've got out there. Let me bring those into play here. And we've got actually we'll start off with movers and shakers, right, from last week. So Alibaba, Baidu, Booking, CMG, and Google. Those 5 companies had phenomenal moves to them last week. So let's go take a look at those. Let me bring up my Trade Navigator. And first, let's go look at Alibaba. That's number 1. You can see the move from Alibaba to 201 down to 183. We'll call it 185.5 is where we closed out. About a 15-point move to the downside. So very nice move for them. From Baba, Baidu is our next one, right? Also 253 down to 246. Not as big of a move, but overall still strong and definitely some bearish connotation with what it did on Friday. Then we have Booking. Booking went from about 2107 to 2032, so about 65, 70-ish points, 75 points. Very nice bearish move on Booking. CMG was the next. This came in as a surprise. Oh, wrong one. CMG. CMG moved along okay on Monday, Tuesday, Wednesday, and out of nowhere, bam, huge gap to the downside on Thursday, and then Friday was just kind of a sideways candle. So from about 467 down to 431. So very nice move. And then we have Google. Google starts out at about $1,175, caught $1,170, and winds up at $1,129. So about a $40 move to the downside there on Google. So once again, not too shabby as far as that overall move presented. If we look at the economic reports coming up, because of 4th of July, there's not a lot the earlier part of the week, Monday and Tuesday, and then Wednesday is the holiday, markets closed. So Thursday, we've got non-farm payroll, which is an ADP report. We've got ISM manufacturing or non-manufacturing. It's the PMI. And then the FOMC minutes are being announced at 2 o'clock. Now, you're going to see light volume on Thursday no matter what because of the holiday, 4th of July, on Wednesday. But this FOMC minutes are going to keep volume even lower. And why? What's happening there is they're going to announce the forward-looking statement for the Fed. And we're looking for little nuances to be announced in there. With the new Fed chair in place, excuse me, we don't have a good read on what he says and how he says it yet. So there's always all of that particulars in there of just trying to figure out where is he going. What is it that he means? Right? So that's the big one for this week. Friday, we've got 3 reports all at 8:30. I'm looking to trade futures on these. I love that they're all coming out at the same time. We've got unemployment rate, non-farm payroll employment change, and hourly earnings. They really are the same report. They just have different answers to them, but they come out from the same data. How about that? So not a whole lot of reports coming next week. Earnings, even that, not a lot. No one really wants to announce this week. You're going to have people taking vacation. The market's going to be lighter volume. AYI is the only one up on July 3rd that is of any value to me at all from there. And then when we look at movers and shakers for this upcoming week, we've got 4 symbols in there. Goldman Sachs, the Spiders, Valero, and Win. So let's take a quick look at those charts, see where they're at. First one was Goldman Sachs, right? They pushed up wonderfully Friday into resistance and rolled over. We had a trade we just closed out on Goldman Sachs. We did phenomenal on it. It closed us out on Thursday, actually, on the last one contract we had. Moved up a little bit more than we are willing to accept the risk for. Friday was a great day to take the bearish trade to the downside. That 218 is the very first level that we see it going to. The SPY, which is the Spiders, the S&P 500, confluence of the 8 and 55 EMAs, the pink and brown lines right here. If we get the rollover, 270 is about our very first target. Not big, but then 266 is our next target from there. Valero, VLO, is our next one, right? Energy, not doing well. All right, everything pushing to the downside on the energy markets. We came down, we retested, gapped up, retested at the 8. If we get the failure, we're right at that 110 level about now, but we're looking at about 105 as our next downside target. I'm sure many of you would be very happy to see that happen just based on the price of oil dropping, gas for the summer. And then we have WIN, W-I-N-N. They've got earnings coming out in a couple of weeks. We had a nice push to the downside. It closed up at the 8. A rollover puts us at 166 and then 161 as our downside targets for the market. So there you have it. Those are the stocks we'll be watching this week.
I hope this update was helpful, and I would love to hear your feedback in the comments below. And actually, if you want more insights like this, you could just go over to wealthbuildershq.com. I'll post a link to it below. Now, the question of the day is, what stocks are you going to be looking at for next week? Go ahead and let me know in the comments section below. So thank you for checking out this video. Subscribe and ring the bell if you haven't done so yet. And until next time, Wealth Builders HQ is bringing you the best tips and tools for building sustainable wealth in the stock market. Keep crushing it, and we'll talk soon. Take care, folks.